AI Finance Portal number 4, the Alpha Seeker data infrastructure. In record time here, folks, we've built up a pretty nice infrastructure for seeking alpha, seeking greater returns from our investments. We're focused on options. So here is the data infrastructure overview. We have an options data table. This is our database view, and it gives us a view of what's going on in our options contract database. So we have over 100,000 options contracts in here. We have Greeks, a slightly higher number because we have some stale contracts in there. The risk-free rate's pretty low, but we have 5 years of risk-free rates there. There's a historical volatilities table. There's a trades table. We haven't started doing any trades. And there's actually a total of 10 tables in our data infrastructure here. Here's some information about information about the tables. We have the options tables. We pull this information once a day. We have 108,000 contracts in there, and it was last updated yesterday. In our Greeks table, from which we calculate the Greek values from the options data, there's 120,000 of those, and they're matched to the contracts there. The risk-free rates, there's a little glitch in there. It doesn't tell you when it's updated. Historical volatility is the same way. These are actually updated every day. So for all of the records in our database, we've been pulling these tickers, the SPY, NVIDIA, Tesla, TLT, which is our bond fund, Apple, and Microsoft. So these are the number of contracts we have for SPY, 37,000, 31,000 for NVIDIA, Tesla 17,000, so on and so forth. And here we have a table that doesn't really tell us very much. It's the contract name. This is the actual identification number for a options contract and the number of times it appears in the database. So we have 83,000 that are blank. Had to take that important phone call. Looking at our database tables as the top 10 tickers by record share. This gives us a proportionality of where we're looking for good trades. So SPY, the spider, humongous, expensive. NVIDIA is 28.7. Tesla has quite a few contracts out there. Microsoft here is only that small a little bit because the total number of contracts they have available is much less than these guys. These guys are big time. Let's go back out here to Portal, go back in Alpha Seeker here. So let's look at some trade ideas. We're going to actually go dig into our database of 100,000 options, and we're going to look at the implied volatility and historical volatility, and we're going to ask it to give us 100 trades there. Find favorable trades. There's some logic built in behind this on the volatility and the limits, and that's the beauty of this thing, is that you program it and it will tell you here's the ticker, here's the fetch date for this contract, and it expires on 4/17 in just 2 days now. It's a call, the underlying price, the implied volatility, the historical volatility for 20 days, and the implied volatility versus the historical volatility difference. So you take this, subtract that, and you'll get this number, but this is important to finding favorable trades. Back out here, Alpha Seeker. Now the bull put spread is a technique that's used by traders to find favorable options positions. A position, you'll have more than one option contract and you're hoping that they work together. So we're going to set this at $1.50 and we're going to find the bull put spreads. And this takes a minute to sort through, so I'm going to pause the video. Alright, so here's the results from our bull put spread finder. Look at the spreads in the options database that expire within 7 to 45 days. So this expiration is on May 2nd. It's less than 2 weeks away, about 2 weeks away. Here's a short strike, here's a long strike. Here's the width. And the maximum return is about 8,000%, which is kind of nice. So the minimum credit's $1.50. We're over here. And $1.50 is the smallest spread. And then the highest spread is actually 160. We're going to get a bit into actually how options work. What we're trying to see here is that we can build dashboards and the database back in very, very rapidly with the assistance of generative AI. One more quick screen we want to look at. And the affordable options, because there's no point in looking at these things if you can't afford to participate. So with you need a margin and all the things, the brokerage fees. So let's look at the margins that are affordable in our database. So for the maximum margin is $1,000. That's all we need to get into a position. There are 11,000 contracts in the database that we can get into for $1,000. Are they good? Are they bad? That requires further analysis. But we want to know what our budget is before we start looking at things. SPY has less than 4,000 contracts at this level. Still more than anybody else. NVIDIA has some contracts and Microsoft has. Everybody's pretty good. So let's multiply that by 10 times so that we need $10,000 to get in. All right, there's 61,000 contracts in our database where a $10,000 margin will allow us to make a deal. NVIDIA, Tesla is number 2 now, and SPY is in the 3 ranking. If we want to go to $100,000, because this is where some of the kids down the street play. Okay, so the margin is greater than $100,000, and we're projecting returns of greater than 20%. 73,000 contracts require no more than $100,000, and this is going to be all of the Microsoft contracts, some Tesla, the SPY, and NVIDIA there. We're going to look at doing some options, the trading and the analysis. But the point is that we can make the whole infrastructure. We built this in 2 weeks, and 10 years ago, this would have taken forever. Or at least 6 months. Thank you very much for your time.